Good afternoon. I think it's just gentlemen at the moment. Aguia Resources, the latest gold producer in Australia. I can confidently predict that from today, we're going to be one of the highest profit margin gold producers listed on the ASX. I've got to be careful what I say because we don't have JORC resources yet, but we're still making money. So the front page tells you the summary of what this company is about. Tiny capex. To go from zero to the cash flow positive stage, it's been less than $3 million. The grade is very high at 30 grams per tonne in situ. Fast track timetable. We didn't get on the ground to start working until October, November. We've gone through a recommissioning exercise with a 30 tonne per day plant, and we're on the way to a 50 tonne per day plant by the end of June. Very quick. And the exploration potential, that's a whole new story. Because we don't have a JORC resource, it's never been drilled, it's been developed on the ore body, and 200 metres of added development on the ore body gives us great confidence that it exists. We're about to start drilling to show above and below the adit just how much gold there really is there, and then the analysts can do the numbers. Our next announcement to the stock exchange, I'd like to think, is going to be in the middle of April, where we can report on 2 weeks of continuous production, real numbers. We're allowed to report that, and I think people will be quite impressed when they see what we've done. So, all right, share price, it's just about 5 cents. Market capitalisation, it's about 70 million. Two largest shareholders are myself as executive chairman and the managing director, William Howe. Now, it's worthwhile pointing out that we're great believers in this. Not only are we the largest shareholders, but we've agreed to take half rations until we can show, accounting-wise, that this is making good money. So we're great believers in the project. So get rid of these. There's a presentation that I've got on the booth if anyone wants to get this, or it's on the stock exchange. It's exceptional. Oh, there's a 5-year share price performance. Sorry, this is a little bit different to what I have in my hand. You can see where management changed there. Down the bottom, you can see on that chart. You can see when Andean, which was originally a phosphate company in Brazil, phosphate's not that easy to raise money on. We did a merger with Andean Mining, which had the high-grade Colombian projects. That closed in July. We see the rising share price there that reflects the word getting out there. We had some escrow selling, which drove the price down, but that escrow selling is finished, and now we've got open skies in front of us. So there's our mission statement. You don't see them very often anymore, but we want a rising share price because we're shareholders as well. We don't want to go back to the market doing these silly 20 and 30% discounts on capital raisings. We won't have to because we'll be self-funding. Now, we would like to be paying dividends out of earnings as soon as we can. And as I said, management's very much aligned with the interests of all shareholders. It's exceptional in many ways, the high grade. How often do you get a 30, 35 gram per tonne gold ore body? We know that's the grade even though we haven't drilled it, because there's been 500 tonnes mined and processed. The recovered grade through a non-optimised Merrill-Crowe process was still 20 grams per tonne. We think we can do better. It's narrow veined, it's less than 0.5 metres in width in most cases, but very regular ore body. It doesn't pinch and swell much. The grade's very consistent. It gives us a lot of confidence. By going in and mining it ahead of drilling, we know that we've got an economic proposition. We just don't know how big it is. We've determined ground conditions, rock mechanics, the metallurgical characteristics. We've superseded the time and the expense of doing scoping, PFS and DFS studies. We're just getting on with it. We're not worried about ticking boxes. And we've done it with total expenditure of the project up to now would be less than 7 million. So we're chasing profitability. We're not chasing scale. High profit margins, 300 US an ounce. Any mine with our sort of grade, let's just be generic, you're not going to be costing more than 400 US an ounce. We think we'll fit into that, but that's a generic statement. What the gold price does from a day-to-day basis doesn't worry us because we're making such high profit margins. And we've got 7 kilometres of veins, mesothermal veins, that have not been tested yet. We have brought out an exploration target. It's 2 to 4 million tonnes at 20 to 30 grams. That's 1.5 to 4 million ounces. A little bit strange that the stock exchange won't let us call it a mine because we don't have a JORC resource. But we're actually allowed to say how much gold we think's there as a target. So we've got a role model. On that map you can see Veritica. Veritica is where we were. Where we are today is where it was 10 years ago. It was capped at about 50 million. It started drilling and had a pilot plant. And within 5 years, it had millions of ounces. Eventually, it got to 8 to 10 million ounces. And it received a $1.4 billion takeover from Zijin Mining. We think we've got something very similar. And that's what we're looking for. We're looking to prove up millions of ounces. And ultimately, it's nice to have $40 million a year or thereabouts cash flow, but we want to be taken out for 1 or 2 billion. That sounds lofty, but it's entirely possible. That's what the ore body looks like. You can see between the red lines there. Very regular, breaks away cleanly. You've got 30 grams on one side of that red line. On the other side, you've got 0. So the main thing is use air leg mining. Don't try and move tonnes in preference to grade. Keep the profit margins high, and we should make lots of money. There's a few shots of the mine. We had to install a thickener into that pilot plant. We poured our first gold in a precipitate form late January. That told us that we needed to wash the ore before we put it into the agitators. So that's why we put in a thickener, and that's halved our residence time. There's 1 day's gold production. That's 5 or 10 ounces, quite nice. We lost a few days production in the commissioning phase as we sought alternative sources. There we have a water track. We've actually put a pipeline in, and we've got very, very good supplies elsewhere. But just when we started building that pipeline, it began raining. But we've got very good water supply going ahead from now. There's the added entrance. There's the ore carts. They're 2-tonne ore carts. They're powered by electric locos. There's the miners and the ore carts there. This is just to show you we actually do have a mine, even though the stock exchange won't let us say it. There's another example of the ore body in the floor. That's the width. That's pretty typical. You've got a bogger there which does the work of 6 men. That's made it more mechanised. And there's a miner lining up the face for the blast. More examples. There's your treatment plant. One of the good things about being so small is there's nothing that's challenging physically. Anything that breaks down can be fixed, easily replaced. It's not an engineering challenge. I've already told you about the Veritica analogy. That's where we want to go. We've got another project called El Dovio. That's ballpark 3% copper, 5 grams gold. That'll be a 2 to 5 metre metre width. That'll be a much bigger project. It's similar to the De mine, which took Sandfire in Australia from 0 to 2 billion in size. We won't get to look at this until later this year, but that's in our growth curve. Now, I won't go into this in detail. Talk to me later if you want, but there's some very good phosphate projects in Brazil. Everything can be sold within 300 metres of the mine, and logistics is everything in phosphate. We found a way of getting into production at less than $2 million, whereas the previous management were looking at $30 million. We're doing a lot smarter. But I've run out of time. The main thing is this is all about high grades, high profit margins. Management is very aligned with shareholders, and I think we're going to surprise people when we can actually say what we're doing to the market. Thank you, ladies and gentlemen.